All right, settle down, everyone. Grab your favorite late night beverage because tonight we respilling some serious tea, and it is not the calming kind. We re-talking about a financial earthquake, a market meltdown, a full-blown, oh crap, what just happened to my portfolio kind of situation, and guess who is sounding the alarm bells? The one, the only Dr. Michael Burry? Yeah, that guy, the genius who saw the 2008 housing crash coming from a mile away, the guy played by Christian Bale in The Big Short, the dude who basically makes a living by being right when everyone else is wrong. Now, I know, some of you are probably thinking, another doomsayer, another Chicken Little, but hear me out, because Burry isn't he just screaming fire in a crowded theater. He is showing us the blueprints of the inferno, and trust me, his insights are not for the faint of heart. Especially if you are riding high on the Bitcoin, Alphabet, Tesla, Nvidia, or Palantir roller coaster, many people ask me, dude, what is your secret to making money? And I tell them the truth. I listen to smart people like Burry, and I do the opposite of what the herd is doing. But guess what? No one ever believes me. They want the magic pill. The overnight millions, the secret formula. And I am here to tell you folks, the only magic formula is patience, a bit of mathematical common sense, and understanding human psychology, especially when it comes to greed and fear. Let us kick things off with the orange digital gold, the darling of the internet. Bitcoin Burry tweeted, BTC patterns. And if you've been around the crypto block, you know exactly what he is hinting at. He is basically saying, hey, remember late 2021? Well, it is happening again. Think about it. You had this massive run up, then a peak, a dip to a support level, another pump to a second peak, and then boom. A decent collapse. Sound familiar? Because if you look at the charts today, it is like a bad rerun of a horror movie, two peaks, and then darkness now. You might think, oh, so Burry saying Bitcoin will dip, find support, and then shoot to the moon, $100,000, baby. Yeah, about that. He doesn't think that at all. In fact, his words are a bit harsher. He said, Bitcoin at 100,000 is the most ridiculous thing that sane people are sitting on television talking about. They read just casually, it is 100,000, it is down. Now it is 98,000, it is not worth anything. Everybody's accepted it. It is the tulip bulb of our time, ouch. And then he dropped the real bombshell. It is worse than a tulip bulb because this has enabled so much criminal activity to go deep under. And you know what? He has got a point there. Before all you laser-eyed crypto bros start spamming the comments, let S be real, Bitcoin, for all its decentralized glory, has a dark side. Remember Colonial Pipeline, $4.4 million paid in Bitcoin JBS. The world's largest meat processor, $11 million also in Bitcoin. This digital anonymity, it is a double-edged sword. And it's one of the big reasons Burry sees Bitcoin going the way of the tulip bulb, all hype, no real intrinsic value. Now, before we dive into the rest of Burry's market predictions, let me introduce you to something pretty cool, especially if you are like me and you love exploring markets without risking your life savings. It is called Plus 500? No, they re not paying me to say this. I just genuinely think it is a solid platform. One of the coolest things about Plus 500 is their demo mode. You don't have to throw your hard-earned cash into the fire right away. You can actually practice, learn the ropes, understand the risks and rewards of futures trading. All with virtual money, it is like a financial simulator for free. Plus 500 is a proper online trading platform listed on the London Stock Exchange, and it is regulated by the CFTC and NFA in the US, which means extra oversight and credibility. They've got millions of users and partner with big names globally. Basically, it gives retail traders like US access to futures across tons of asset classes. Think indices, forex, energy, metals, agriculture, and more. So what are futures? They read basically agreements to buy or sell something, say a stock, an index, oil, or wheat. At a set price on a set date in the future, it is how traders speculate on where prices are headed without actually owning the asset. Let me quickly show you. Once you log in, you can switch straight into demo mode. Super easy this way. We can play around, play some dummy trades, and get a feel for everything without any real money on the line. They've got a huge range of instruments, gold, the SP 500, cocoa, you name it. But what I really dig is the super clean and simple interface. No clutter, just what you need if you want to search for something like copper, just type it in, and boom, all the info, live stats, buy and sell prices right there. And of course, futures trading has risks, but Plus 500 gives you advanced risk management tools, like stop loss and take profit to protect your capital from crazy downturns. So if you are curious about futures trading and want to test the waters, Plus 500 is a good place to start. Use the demo mode, get familiar, and if you do decide to go live, you can even get a $30 bonus when you deposit. At least $300 using the code Cooper30. Links are in my bio, as always. All right, let's pivot from the Wild West of crypto to the seemingly unshakable kingdom of Google, or Alphabet, as the cool kids call it. Everyone, and I mean everyone, uses Google, right? It is woven into the fabric of our digital lives. So what could possibly go wrong? Burry dropped a tweet bomb on Alphabet stockholders, warning about their plans to issue a 100-year bond. Yeah, you heard that right, a century bond, the first tech 100-year bond since the dot-com era. And Burry being Burry, he immediately drew a chilling parallel. He said, Alphabet looking to issue a 100-year bond. Last time this happened was Motorola in 1997, which was the last year Motorola was considered a big deal. Think about it. In 1997, Motorola was a top 25 market cap and revenue corporation in America, ranked #1 in brand value ahead of Microsoft. Can you even imagine? But then Nokia happened. The iPhone happened, and poof, Motorola vanished from consumer relevance. Today, it is like the 232nd largest market cap, with sales barely ticking 11 billion. And guess what? Motorola issued its 100-year bond right around its peak mania, then crashed over 90%, taking 21 years to recover. Burry is essentially saying, Google, you are not immune. You could go from the undisputed king to a mid-tier, largely irrelevant company worth a fraction of your current value. Now, I know what you are thinking, but it is Google, it is cheap compared to other tech giants. It is a value investor's dream, but here is the kicker, the magic of Google search. Its golden goose was how incredibly cheap it was to run. Most searches weren't monetizable, 85% of them. Just people asking silly questions. What did Columbus really do? Google made those searches cost infinitesimal fractions of a cent, but AI, oh boy, AI is expensive. I run queries that I know cost tens of dollars just for one inquiry. Google's business model, their cash flow, it is all built on that golden goose of cheap searches. Burry's main point, when you have a golden goose for too long, arrogance can creep in. You think you are the king, you lose innovation, you believe your business model is eternal, and then you issue a 100-year bond, the Motorola story, that is the smoking gun. Motorola was king, then Nokia humbled them, then Apple destroyed them. The 100-year bond was issued almost exactly at the top. But it is not just Google. Burry has a warning for the entire market. He is talking about the massive influx of passive money. Over 50% of the market is passive money. Now, index funds, ETFs, all that stuff, less than 10% is actively managed by people actually thinking about stocks. His concern, when the market inevitably goes down, it is not going to be like 2000, where you could find ignored value stocks to hide in. No. This time, everything is so interconnected by passive flows that when panic hits and people pull money out of index funds, those funds have to sell everything. Indiscriminately, good stocks, bad stocks, all of them, there is nowhere to hide, no escape hatch within U.S. equities. He even dropped some clues on what could be the catalyst for this crash. He replied to a tech writer, the market is just jittery over historic overvaluation, historic capital expenditures, and tiny AI revenue. Let us break that down. Historic overvaluation, stock prices are ridiculously high. Historic capital expenditures, companies are spending crazy amounts of money, and tiny AI revenue. The cash these companies are bringing in from all this AI spending, it is minimal from an investor's perspective. This is the opposite of what you want. High prices, high spending, low revenue. It is like burning money in a fireplace to stay warm, but the house is already on fire. Burry believes we re-at levels of prior market peaks, like the shale revolution and eerily similar to when the dot-com bubble burst. But he highlighted 3 stocks in particular that he thinks will lead the way down: Tesla, Nvidia, and Palantir. First up, Tesla. Oh, the cult of Elon. Burry tweeted, say what you want, but I am right. Tesla's market capitalization is ridiculously overvalued today and has been for a long time. He said this when Tesla announced they were scrapping the Model S and X to build robots. Burry's take. As an aside, the Elon cult was all in on electric cars until competition showed up, and then all in on autonomous driving until competition showed up, and now it is all in on robots until competition shows up. His point is clear. Tesla's narrative keeps changing, and the fans keep following. Electric cars, self-driving, now robots. Every time competition emerges or weaknesses are exposed, a new story pops up. This is why Tesla's worth everything narrative keeps appearing. But for a business to be sustainable and actually worth $1 trillion, it needs a sustainable business model and to consistently outcompete rivals. Tesla makes $3.8 billion a year in profit, mostly from cars. How many years will it take to justify its insane valuation? It is a house of cards, folks, built on hype and ever-changing promises. Next, Nvidia, the poster child of the AI boom. Burry calls Nvidia and Palantir the 2 luckiest companies on the planet. Why? Because neither produced a product for AI, but they the 2 poster children for AI. Nvidia, originally a computer graphics chip company, got lucky twice. First with crypto mining, because GPUs were just the thing that was there that could be used, and then with AI, it was the same deal. Burry isn't saying Nvidia is innovative. He is saying their dominance in AI is some grand visionary AI strategy. It is a result of being in the right place at the right time twice in the market. Oh, the market? It is pricing it like they were geniuses. And of course, Burry puts his money where his mouth is. He has shorted Nvidia stock, meaning he profits if the stock goes down. He is basically betting against the AI hype train, and another stock he has shorted, Palantir. He is even more bearish on. Burry view on Palantir. Palantir was not an AI company. Basically, when ChatGPT came out, they basically put an AI cover on their applications they were selling and then selling all this consulting on. And they call it AI. But that is what every company is doing. Now he tweeted, I am working on something PLTR. And if you are a trader, you know PLTR is Palantir's ticker symbol. He is hinting at the classic head and shoulders pattern. Left shoulder, head right shoulder, and what comes after the right shoulder, the rest of the body down. It is a trading pattern that suggests Palantir could crash. He even put a support level around $80 and a landing level just over $50. With Palantir priced at $150, he is basically screaming sell, sell, sell. So, after all this doom and gloom, where does Burry actually recommend investing? Besides shorting stocks, he has only mentioned 3 places where he sees opportunity. The first, Hong Kong stocks. He responded to a tweet saying JD will continue to go down and no one will ever buy them with, but it is just getting good. Hong Kong on sale exclamation mark. So yeah, he is seeing value in Hong Kong. The second, when asked if he owns gold, he said, I've had gold since 2005. So gold, the classic safe haven, that is his second pick. And finally, if you are going to buy something now, buy healthcare stocks. They really out of favor. He is saying if you own something that has gone up a lot that feels overvalued, maybe it is time to sell and look at unloved healthcare stocks. So there you have it, folks. Michael Burry, S Unfiltered, no holds, Bard take on the market. It is a sobering reminder that sometimes the most popular investments are the ones with the most air in them. My takeaway, Don T chase the hype. Don T get caught up in the fear of missing out. Do your own research, understand the fundamentals, and remember that every unnecessary expense is you firing an employee who could have been making you money. Stay boring, stay patient. Peace.